And we are live, guys. Welcome to another live stream from Men of High Value channel. My name is Joseph Darling. What we're going to go through a little bit today is something that I've repeated before. Focus versus diversification. Why do we diversify so much? In the stock market, they diversify to remove risk. And they say that, for example, instead of investing only in one company, you should spread your risk to at least 15 companies. Because then it'll be only 7% risk management in your portfolio, instead of being 100% reliant on your one company that you invest in if you focus. Now, what is wrong with this strategy? Well, there's nothing really wrong with this strategy. It's just that it's difficult to keep up with 15 companies and what is going on with these 15 companies. It will be a lot easier to follow up with 3 handpicked, amazingly followed and focused on companies than 15 average following up companies. Like, yes, you could definitely invest in an index fund, which is basically like a fund that covers all the companies in, for example, in America or in, for example, Norway, and hoping that the market will stay okay. But there's different levels to how much you can focus on. And the higher your ability to focus, then the more successful you'll be. So there's a saying called, you shouldn't put your eggs in one basket. But I would rather change it into something that I have to quote from someone else whose name is Todd Duncan, and he said that focus is the key to success in everything. And he said you should put all of your eggs in one basket, but then you should watch the basket. And for me, that's just a perfect example of the importance of focus, because if you're focusing and you're watching the basket and you're making sure that everything is okay with the basket, then you'll always be ahead and you'll always be able to switch baskets if necessary. So I think being not educated is the highest form of risk there is. You need to know what's going on. And that is something that is difficult to keep up with when you're diversifying. I would say following up with 15 different companies, as an example, is a full-time job. Like, to know everything that's going on with all these companies and just hope for the best, it's not really a good strategy. Now, even better than only focusing on 3 companies that you're not working in and you're just investing in them, I would say the best strategy is investing in yourself as an entrepreneur. Why are you focusing so much on investing in other people before you invest in yourself? You remember, charity starts at home, and your skills is the most important skill set of anyone else in your life. You are the leader of your life. And when you invest in others, it's not a bad thing. I'm just saying, if you're investing in others, you're basically saying to them that they should take you somewhere. Right? Instead of looking at it in terms of, I want to help you because I believe in you. And when you invest in companies like that, I want to help you because you're doing amazing things, but I just can't be there. Then you will receive 10-fold back or 100-fold back. Does that make sense? This is another way of looking at investing. It's Yes, one, it's teamwork. You're involving other people in terms of raising your income. But have some belief in yourself that you are capable of creating something special. You are capable of being an entrepreneur. You are capable of solving a problem and finding solutions to things in the marketplace. There's no need to invest solely in other people. Like you're working, and putting in tons of hours, and then you're putting in money into places you don't know what's going on. Yes, you might get a 7% return on average throughout your entire life, and that's what's happened the last 100 years, but past results is not an indication of future results. What we do know, however, is you can grow a lot faster than 7% if you spend time with the people who are growing at greater heights or greater rates than 7%. You have to put yourself in an environment where people are growing and going places. That's what you should focus on. Focusing on yourself, your education, your skill sets, because that's what's going to make you the most money. If you're continually focusing on, I gotta put money in other people, and I've got to invest in other people, and I've got to put up my investment accounts, and the best investment account is your account for education. Understanding yourself, understanding relationships, understanding women. This is an important one. Understanding finances, personal economy, like how to run your business, how to understand where the money goes, cash flow, understanding taxes, or at least having an accountant, right? That's way more important than investing in stocks, because an accountant can make sure that everything is, going good, and you can ask for reports from him, etc. And investing in your health, like those things that will actually give you tons of joy. And yes, should you have Robert Kiyosaki, he says that you should have 3 piggy banks, and that's his investment account, the way he calls it. He says one should be for savings, another one should be for investments, and another one should be for tithing. Tithing because not necessarily in the sense of the religious organization, but just the fact of that you're giving to other people is going to give you good karma back, and is going to open up your mind to giving and receiving. And what I'm thinking about in terms of tithing, there's someone who said, I think actually it was Robert Kiyosaki who said it, which was basically tithing is not necessarily for a church or anything like that. Tithing is where you should put your money in a place where you yourself would be if you could. I love that, because there's causes you believe in. There's companies that you believe in. And if you could, you would have been there working arms in arms with them in order to accomplish a goal. But you don't have time, because you have to take care of yourself, and you have to help others, and you have a family, and so forth. So that's how I look at tithing. And the richer you get, the more tithing you pay. Like, I look at tithing as kind of your investment portfolio. I love this company, I love what they do, and so I'm going to invest 10% of my money in what they do. It's fantastic. So, but anyway, this is just me rambling on about focused diversification, investing in yourself, educating. But it's important to think about these things. So, this is what the Men of High Value channel is all about, is daily reminding you of what's out there, what the potential of you, and the potential of what you could do if you really put your mind to it. So anyway, this is the Men of High Value channel. My name is Joseph Darling. I'll see you again tomorrow.